Hello and good afternoon, everyone. Brandon Wilson here, coming to you from our media room here at Fairway Mortgage, the Heritage Group. You are watching episode one, the pilot of Mortgage Nuggets with Brandon. What's a nugget? Like a Chick-fil-A nugget? It's not. As great as those little morsels are, this is not that kind of nugget. So Webster actually uses the term nugget in this sentence. A seemingly inconsequential nugget of information that proved to be the key to cracking the case. Now, are we cracking a case today? You could say that. So I'm going to title this episode one of Mortgage Nuggets with Brandon, Price Reductions Help Nobody. Now, when I say nobody, I mean absolutely nobody. It hurts the seller. It hurts both agents. It hurts the neighborhood. And lastly, it hurts the buyer. Now, you're probably thinking, how in the world would a price reduction hurt the buyer? I'm going to share my screen with you really quickly. I'll be jumping back and forth here. So just bear with me one second, and we will hop right in. So you should be able to see my screen right now. I'm going to be reading from a different computer. So we're using the following parameters in this model. Rates here are based off of a 740 credit score, Home Possible program, 3% down conventional, 30-year fixed. And these rates are as of Friday, February 1st. Hazard insurance in this model based off an estimate in the area of 0.75%. Taxes based off estimate in the area about 2.5%. Now, for easy math's sake, we'll be using a sales price of $300,000. As mentioned, all loans are 3% down, 30-year fixed, Home Possible. As the agent, you can really go a few different ways here, both the buyer's agent and the seller's agent. Now, what do most agents do? What do most buyers do? When you're making an offer, what do a majority of your buyers do or ask for? A price reduction. Now, why does this happen? Many times it's as simple as the agents and buyers just don't know. They don't know the long-term effects of what I'm about to show you. So this is why it's, incredibly important to work with a knowledgeable loan officer like myself or like any of my team here at Fairway Heritage Group. We can go through this model with your buyers and sellers. I would even go as far as having your loan officer help structure your buyer's offers and counter the seller's offers that are asking for a price reduction. A bit of information from both your buyers and your sellers can certainly go a long way. So we'll hop right into the model. All three of these routes will be using roughly a $7,000 cost. Now, it's where you apply that $7,000 that makes miles of difference. So we'll start at the normal default in the yellow section. That's the price reduction. Now, the top line in this section and the top line in each section, it's simply the $300,000 sales price standard with no reduction. You'll notice that the loan amount in the price reduction would go down to $284,118. The reduction in sales price in this model would lower the principal and interest payment as well as the taxes and insurance. Saving, and I do say saving tongue in cheek, it would save your clients or the buyers $56.98 monthly. Awesome job, right? If you're representing the buyer, you're a winner in their book. What unnecessary damage has been done? Well, we'll go over those. Firstly, you've reduced your commission and the other's agent's commission. Assuming it's at 3%, you've reduced it by a little over $200 a month. Doesn't seem like much. $200 per transaction doesn't seem like much. You do this several times over the course of a year, and it starts to add up. It really does. So the second thing you've done, you've reduced the net to the seller unnecessarily. 3, and probably the most negative over a course of time, you've lowered the neighborhood comp. Your reduced sale that you've just sold is now a comp for the next home in the neighborhood. If this cycle continues to repeat, and it will, property values will continue to drop. So don't throw fuel on the fire of shrinking property values. So you probably ask me or ask your loan officer, what other options do I have with that $7,000? So we're going to look at option 2 in the blue. In this example, you'll see the sales price remains the same at $300,000. And we're going to use that $7,000 that we used in the top example. We're going to use that to permanently buy down the rate. You notice that the rate's going to change from line 1 to line 2 from a 4.625% down to a 3.99%. This method will keep the agent's commission the same. The seller will net the same as expected, and the buyer will save $108 monthly permanently over the life of the loan. Excuse me. You're looking at a net savings over the life of the loan of over $68,000. That's with a comma. If your client thinks you are a hero with the price reduction, wait until you talk to them about this. Wait until you put them in touch with the loan officer like myself that has that next level thinking. So we'll take things a bit further here. In the green section, we have the option to have the $7,000 go towards permanently removing the mortgage insurance. Now, this method I would only recommend if the buyer plans on staying in the home less than 5 years or less than the amount of time it would take for that mortgage insurance to drop off when you calculate the property appreciation and the interest payments, the principal payments towards that loan. And we can run those models, case by case scenario for you. No point at this time would it make sense, if they're not planning to stay in the home for an extended period of time, to use that $7,000 towards buying the rate down. It can be used elsewhere. So with this model, you'll notice that the rate and the sales price stay the same, keeps the seller happy. The money in the agent's pockets stay the same, no reduction in neighborhood comps. And you've saved the buyer on this model almost $180 per month. Awesome. Congratulations. You have now achieved hero status. Now, lastly, I want to pan out a bit and give, a price versus rate versus seller paid MI comparison. Now, I'm going to share an alternate screen here if I can. Let me see here. Just bear with me one moment. So this last screen is going to essentially put the loans side by side. This is a price versus rate screen with our Mortgage Coach tool. It allows us to put the loans side by side. So you'll see in line 2 here, you'll see the price reduction and the total savings per month. Now, this number down here with the rate reduction, this is the number that you would have to ask for or reduce the price by on the home to equal this loan. So essentially, you'll need to lower the sales price over $21,000 for the loans to be equal. Now, if you go the seller paid mortgage insurance route, you're going to need to lower the sales price about $28,500. Now, even with the snowflakes chance in hell that you get that accepted, the 10% price reduction, you've now taken money out of both agents and sellers' pockets, as well as reduced the neighborhood comps tremendously. Now, I thank you for joining me today. If you found value in this video, please like and share. If you're not working with a loan officer that has this level of thinking, it may be time for a switch. I'd be honored to serve you and your clients. So just give me a call today, 469-267-3133, and we'll see you during episode 2, jumping forward, episode 2 of Mortgage Nuggets with Brandon. Have a good day. God bless.